The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and it's my pleasure to be here Monday through Friday on market days, 11 o'clock till 12 Eastern Time. 877-927-6648 is the number to call, as you heard. And thank you, Steve, for 2 great hours. And, of course, today we're followed by the Options Hour. Should be a great show, as always. Programming right through the day. Tom O'Brien wraps it up 4 o'clock till 6 o'clock. And this is a fascinating period. Fascinating period for a number of reasons. First, the primary aspect is the rotational market from the summer of 2010, which we were identifying right here in my opening call. That's the daily service of my newsletter. I said that there's a chance that there's a rotational correction that's starting up, and that in fact could sustain a high-level consolidation so that as stocks that have had a good move start to correct, others, the laggards, money fund managers grab the laggards, and those laggards sustain the market. So what I said to subscribers this morning, that only under certain conditions will we short one of the indices. That's number one. Number two is we have a mixed portfolio, short and long. Long and short, short and long. And I feel quite comfortable right now with the aspect that there are stocks, like cyclical stocks, the late cycle stocks, that are doing quite well under these conditions. And with a backdrop that would say, or what's going on there? So that's the stance that we have right now. And I think that it's important to be able to distinguish between breakouts, breakdowns, potential breakdowns. There's one particular stock that we were looking at this morning, which we were trying to get a put option on, which should be one of the most important stocks. And in fact, it's just failing here. And yet it's in the wrong sector. That's the whole issue, is sector identification. Now, that can change, and that can also mean that if you're wrong, you need to be as quick as possible to make an alteration. But here's the other thing. Being quick has also cost us on the long side, because I was trying for a couple of weeks now to stay in certain positions that I really liked. I'd done the longer term aspect, but I still didn't want to give up profits. But you know what? Those positions, some of them were taken out, and it's been a little struggle to get back in. And the struggle has really pertained to the inner strength of this rotational cycle that says, under these conditions, we are looking at, I must just check something here. Just wanted to check something, if you don't mind. Yeah, I hope we got that. Missed it. Another one that I wanted. And we just got stopped out to the penny. The exact penny was the low the other day, and we got taken out for a little bit of a gain, and now it's just moving. We can't get back on board. That is the nature of this market. It is when you've got the Fed printing money and pushing, and made a stated, concerted effort to say, we want the public in stocks. It's really hard to do the traditional thing. And if you hear someone saying, people are saying it's different this time, how can you not say it's different this time? It is different this time. It has been different this time for a while. You've never had the Fed doing this. That makes it different. So you've got to be able to bias yourself towards a leaning that favors the Fed's action, and at the same time, you're still going to do your technical homework. Not easy to do. And it means also that you've got to have the flexibility, because we are due for a pullback at any moment. Could happen this week. And I want to be prepared for that under the traditional circumstances. If it doesn't work out because of the Fed, etc., 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 what can I say? Look, here's a typical example. The E-minis have gone to an F/A. Now, F is saying, hey, you've got to be really careful here, because if it's peak F coming up, we can be pulling back very sharply. The technicals, now the stochastics at 92%, but yesterday it was pointing down. It's still good at 90%, I believe, but pointing down. And the MACD is not really showing tremendous strength. It's good, but not showing strength. And other indicators are starting to say, hey, you know what, there's a divergence between the price moving to the upside and what's going on the downside. At the same time, we've got a perfect peak D in the 120-minute chart. Let me open this out. If you're looking at Tiger TV, the chart on the left is the daily. Chart on the right is the 120-minute chart. And what did it do, just to really confuse things? The MACD and stochastic were way at the bottom, were turning up, but gently. And all of a sudden you get this price move today from a low of 1947 on the E-mini S&P's 500 September contract. And it goes to what? It goes to 1960, a round number high, 25 cents above the previous peak D. It made a trough D in the 120-minute chart and an exact price time match from the left side to the right side. And now you've got the pattern that says an arch formation that gets taken out decisively with 2 out of 3 closes above it. Could in fact go even higher, but we're at all-time highs for the E-minis. So this has the potential now to be a double top or a breakout. So it's E/A. It drives me nuts when we get this kind of pattern that says it could be very weak or it could be very strong. So all you have to do is you have to get yourself in place to benefit from this as much as possible. And at the same time, you've got to say to yourself, under these circumstances, is the bias at this particular point weighted to the upside or the downside on whatever tradable or chart you're looking at in whatever time frame. So with that, let's just run through the numbers. The Dow is up. Let me just get this over here. Give me a second. The Dow is up 21 at 16,959. Hasn't yet made an all-time high at 16,978. 79 would make the new all-time high. It's struggling at the millennium level, the 1,000 level. That's in this case 17,000. We are seeing exactly what you would expect, and that is some kind of resistance especially since it'll be in the Dow, it'll be in the 16,990s, that area there. A snap through into the 17,020, then 17,050 area. That's going to be very positive. Now let's look at this. We've got the S&P, which is trading up 4.5. Let me just show you something here. SPX.X. The S&P has got a leg. Well, let me just check. 1963.91, 1963.74. So this is now G/C. When I get to a G/C and the technicals are this strong, I say, you know what? Even though the VIX is in the 10.92 area, it could go lower as this price goes higher, with the stochastic at 97% and the MACD is still quite good. And the 120, I thought I did this. The 120-minute chart is in I believe, and let me just double check this for a second. 37.23. Yeah, that's what I thought. So that's B. Right there, B. C. I'm doing a Chapman wave notation. C. That's going to have to be A, B, C in the 120-minute chart with a Chapman wave instant restart. So as it stands right now, there should be higher highs to come in the S&P. The S&P is trading up 4.66 at 1967.27, and the weekly chart is this is starting to hug the outside trend line that says A decisive move above it would be very positive, and the monthly chart is already broken out. This is very good action right at this particular point. Now let me do this. So that's that. Now I want you to go through to the Qs. The Qs are breaking out, and this has to be now considered leg D up, D. And in the weekly chart, this is an extension of leg E/B. And the monthly chart is leg F/B. Still very, very good action. Then we go to the gold GC Q14, and then we're going to start getting close to the break. So, yes, this is very important. This is, I thought these notations were actually already in place. Am I losing notations here? TradeStation did a great job in one aspect. Let's see if this is going to be fulfilled. Okay, so what we're looking at in terms of the gold contract, no, something's wrong because I had notated this really well. I'm going to just do this because I want to finish it up. You can see how I do it. So this is A. Man, this is frustrating. 1272.80. 1272, 1272, 1230, 30, 30, 30, 1270. Okay, there we go. So there's leg B, leg C, and a D. And now we're going to, I think that's a DE. D, yep, that's a D. Pulls back, starts a brand new move. It's always very difficult to get. Goes A, minus A, B, C, and it does suggest, we're going to put E/C. E/C. Does suggest that we could pop up a little higher above today's high earlier on of 1326.60, but gold, as I see it right now, is getting just a little bit toppy intra-week. The weekly chart is still good, but I mean intra-week because the daily chart is in leg D, and that says be careful because it's had a tough time breaking above the 1315 200-period exponential moving average support resistance line. My suspicion is that it could wiggle around here a little bit, so we'll be watching this one real closely. Silver is at this, so gold is up 60 cents at 13.19. Silver's up 0.07 at 20.99. Platinum's up 13 at 14.69. High-grade copper's finally gone to the 3.1s at HG. This is going to be quite important. At HG, yep, a strong leg A, if it's not just a... this A says that if it goes to the 3.17 area, there's a real good chance it will test 3.1925 in the continuous contract. The previous high made the 27th, and that'll start leg D in the weekly, and that's going to say, hey, there is a bit of improvement around the world. I want quickly to touch on the dollar, on the TLT, up 55 cents in a trading range now, holding that weekly chart is saying that is a peak E, and we're having a consolidation, but it's a high-level consolidation. I'll be right back after these messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. We're back, and the Dow's up 23. S&P's up 4.78. Interesting how they've rotated every day. Either the S&P is stronger than the Dow. The Dow's stronger than the S&P. Most importantly, what I'm looking at here is how do we relate? For instance, let me do this. It's much better. Look at the chart, and I'm going to show you something. IBB was just about to pull back. It had not a good candle yesterday. The stochastic and the MACD were just about to top out. And then what happens? Vertex comes along and has what's happening in biotech is just fantastic. It is phenomenal. It puts us in an age. I just love this age. I mean, I'm alive because of all this stuff that's going on. I love it, but I don't like to see it when the IBB spikes up 5.62, 258.53, when it looked to me like it was just about to pull back into the body underneath 250.61. So this kind of news, we've got to anticipate surprises like this. And it says, hey, wait a minute, mister, are you telling me that BIIB, let me just type that in, BIIB is going to be going back to the low that it made back in April, back to that 272 low after making 259.89 all-time high? Hey, it's at 317 right now. That's 40 points higher. Are you saying that it's going to go back to the low, the 9-period moving average of 294, 30 points, 20, 30 points from here? And I'm saying, I believe so, unless things have changed and the breathing, natural breathing, and consequence of highs that are made under certain circumstances is going to be set aside. Those rules just don't apply anymore. I think it will be coming back. Will it come back now before making a possible leg D at 359? I don't know. I've got a G/C. The MACD is stopping. It's rallying. It's flattening out. It's got exactly the same pattern that gold had when it made its peak F-top back a couple of years ago. Stochastic's pulling back. Relative strength, the on-balance volume. The weekly chart is not very strong right now. What about Amgen, AMGN? Well, Amgen's got exactly the same pattern. It went to a nice recovery high at peak E just a few days ago. Let me type that in, peak E. But now the technicals are saying a lot needs to happen to start a brand new move to the upside because we're getting a little tired. I'm going to put, it should be E/B. I'm not going to put the B right now. I'm calling it E for this moment. And this is going to be B in the weekly chart. And Amgen, beautiful, beautiful chart, a monthly chart, but it made a peak D. And everything about this chart says the best that can happen is that there's going to be an H, lowercase h pattern as the arch becomes resistance and it comes back and tests the 110s. And it's at 119 right now. I am wrong if both of these stocks break out 3, 4, 5 points higher. We'll see. That's all you can do. Because under every other circumstance, this should be, in fact, some kind of arch formation in both the daily and the weekly pattern, and we'll see if that doesn't happen. Now, I looked at a stock recently. I said I do this for years and years and years, probably decades. CTAS, Cintas, Overalls and Clothing Rentals. This is telling me a different story. Oh, no, I've got a problem here. Something's happening. Got to call TradeStation again. They did a great job, but there's something happening because I typed in the E. That's why those arrows and things are there. So let's see if they can organize it to be able to repair this particular issue right now. But they never thought of that because most of this applies to people who type onto the chart, and they have most people who do automatic trading with systems analysis. They say, oh, there it is. So that's interesting. The letters are being taken off, the new letters. Not all of them, some of them, and some are not. So we're going to get that. But Cintas has gone to leg A, and I remember I made this yesterday. I called this a B, and I called it Chapman Wave Phantom B, and then it goes to a C and a D. Otherwise, this should be C technically, but I'm calling it a D for now. And I'm saying, hey, if Cintas core, overalls, clothing, rentals, trading at 62.78, down 40 cents, is starting to act very poorly and looks like it could pull back, it's at 62.78. The real test comes at 61.60. If that's the case, then this monthly chart is in D, and in fact, it should be saying that economically, we could be looking at this rotational market starting to impact some of the sectors a lot more than others. So just a real quick thing, Facebook I was asked about. Yep, there's Facebook. Facebook acting really well. I have to consider that this is really leg A, B. This is really leg C in the day. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. So Facebook is trading at 67 up $1.63. In the pack that I always look at, both the stalk leg formation and, in fact, the instant restart. I don't know if I can draw that in, and you can see it. There it is. And the instant restart, I'm calling this leg C, or it could be G/C. Right now I'm calling it C. I don't see any reason why not. And in the weekly chart, it's a new leg B, what I call gray leg B. I'm not going to change it right now. And Facebook monthly is made a peak C at 72.59. If it goes to 72.60, that starts leg D. And I do expect that I spoke about this a long time ago. I said I do expect that Facebook is going to make a leg D. And is it a tradable? Well, maybe on the next pullback it's a buy. I had to see it start to break the 65's resistance, and now it's done that. So it's over that 50% level, and I like it. I like it here. The 120-minute chart, I'm calling it leg D for now. This one is not as clear as the others, but I'm quite comfortable calling it D. It could recycle, in fact. But it made a peak C before in the 120 and doing well. So, and the stochastic is at 89%, and the MACD is expanding. So I see Facebook going higher. That's part of this rotational market. Now, I'm expecting that because of what we're looking at, that the Dow is going to have a tough time here, maybe tougher than some of the other indices, although I think the S&P will be more in line with the Dow. It's how the Qs act to the NASDAQ, the composite index and the index 100, as well as let's look at the IWM for now. So the IWM has support at 117.38 on the daily 9-period exponential moving average. However, the way it's moved here, that has to be leg D in the daily at 118.60 up 67.67. That's 50.57%. Dow's only up 0.11%. S&P is only up 0.20%. So you can see that there is a diverse market here. And I'm expecting that. Why I say this week's going to be so important, because if the Russell goes above 128.58, I have to then put F/B. This is, when I say we've never seen anything quite like this before, believe me, I've been doing this every single day, well, just about every single day, every single market day, for the last 30 or more years, doing a market call on the Dow. And all I can say to you is that I've seen patterns repeat. On a chart basis, the pattern's repeating. But if there's a breakout from here, especially in the iShares after that doji high at 120.58, and already it's looking pretty darn good, and it breaks this trend line that goes up into the 124, 125 area into July, let's say, I have to tell you that the normal exigencies of the market, the normal breathing that you would find, look at that move to the upside, peak C, D, and E. That is highly unusual. You do not get such a tight pattern in an index as broad as the Russell 2000 and moving like this very often. So it's obviously being helped by the Fed. So putting that aside, let me just see any messages. Yes, I do want to have an email. So here's the question. And the question is, what are the parameters that would make me decide that the monthly charts have actually made a top of such consequence that it is that we're going to be more in an intermediate term sell rather than this extension of just going on and on like the Energizer Bunny? And I would just tell you that it's the IWM has to break down in the monthly chart. It's at 118.67. It does have big down moves on a short-term basis, but certainly not on the intermediate-term basis. Even the move from 120 to 107.44 to the May low, you can see it on the chart here. Yeah, it's something, but it didn't even break on a closing basis, the 9-period moving average, which is at 112.56. So I would say it's not just a close under 112 that would count. It would be a close under 107. I'm going to call it 106 just to be a little safe, give it a little room. A close under 106 for 2 consecutive months would say to me, watch out, because you could be in for more of the downside in time. So that's what I'd be looking at. And I'll maybe at the end of the show, I'll do all the different indices. I want you to show you the IYT. Look, here's the IYT. Good day today, but it made a peak F. Right in that up channel, another channel I call an inside track because it has a low and it has a high. And then within that, from the top, you put in the red line. And from the bottom up, you put in the green line. When it gets into that zone at the bottom, it usually bounces up. It's a propellant zone. When it goes to the top, it's a repellent zone. So I'm watching this closely because everything about what I'm looking at says if Federal Express, which had fantastic earnings and a good report, this is now either E or F. I'm sorry, this is E. Let me do that again. This is either E/brand new A or old F brand new B. And the technicals and everything are so good that says that Federal Express, FedEx, trading at 150.98 up 2.10, should in fact at least try for a leg D. So that could take us all the way into next week. Now, what's happened is that because of FedEx's move, look, that high that was made. This I'm calling leg E in the monthly, and leg E/C in the weekly. So however I look at many of these charts, there's no other way to look at it but to say, you know what? We are extended, and to get some kind of a top, you need downside action that holds between 5 and 7 sessions before you can be convinced that you can go even lower. Because otherwise, every time there's been just a real quick move to the upside. And yeah, I'm showing we were a half position short on February Express at 140. Thank goodness we had our intraday stops in. Everything worked out. We only lost about 2 points. That's an amazing thing with a stock that gaps up so big. But we were lucky we got it in at the right price. So let's go back to what we were looking at a couple of days ago, UNP. See, UNP is a very important stock. This is Union Pacific, trading at 100.85. I believe that the top that was, the peak F that I call the top, 102.6, that was made, 102.96, that was made at, on the 10th of June, by the next candle, the lower high. This is going to be very important because nice candle here. If it breaks, if Union Pacific breaks above 101.44, let's call it, goes above 102, just to be safe. That would say, man, this thing wants to try to test the old high. What if it breaks down from here? It needs to take out 99.28, the low of the 17th of June. So as I'm looking at it right now, I'm saying the weight of evidence says that the weekly and monthly we can't talk about negatively. It'll all have to start in the daily, and the daily says it's real simple. Close under 99, and Union Pacific is starting to make something much more serious. Why? Because 98.82 is the 9-period exponential moving average in the weekly. So now I think my screen is good. Let's see. Yeah, just a question that Dan, I believe that I've got it. Anyone there having a problem, just tell me. But I think that my charts are showing up nicely. You'll have to refresh, Peaky. So this is just someone in the den asked me to refresh. Okay. Now, here's a quick thing I wanted to do. When I'm looking at the transportation index, and there's a one positive component and one potentially negative component. Very important stocks. But most importantly, there's the pattern that I call the rectangle that eventually makes an arch formation without taking out the highs. And the IYT, it's real simple for me. This is the pattern I'm looking at right there. And it says that any move below 145 to 144 support, a break under that, and it's bound to test the 142.90 low bar of the 12th of June. But here's the real thing. Look at the up channel buy zone. If it comes into that and it takes out 143, and especially if it takes out the 142.90 low, suddenly the support level becomes a resistance level. So I'm looking at that very closely. And we haven't got there yet, but I'm just saying that this is what I want to keep in mind. Now, the other thing was I want to look at bonds. So we'll do the TLT, 20-year Lehman T-bond fund. You see, trying to establish some kind of a base of support here. This goes there. And all I can say is that if this market starts to decline and you do see the TLT break into the 113.50 to 114.20 area, all of a sudden that resistance up channel that was a propellant is now repellent and keeps pushing prices down. If it takes that out on the upside, that'll be very positive, and it'll say money's flowing back into bonds and out of stocks. That's just the way I'm going to look at it for now. But in the meantime, we've got a peak E, which says there's a more, not a shorter term, but a more intermediate term sell signal in the weekly. It isn't a sell mode yet, just a sell signal. The daily has already gone to a sell mode. It says that it needs to propel to the upside, because if 109s gets hit very soon, that's going to say, uh-oh, that could feed the market, the stock market, as money comes out of bonds. Just a fascinating way. I always think of the scales of justice. You've got the left side, the right side. And in this particular instance, what we're looking at is It's more like if you've ever been to the ocean and you've looked at one of those rocks that has been pounded for hundreds of thousands of years, and it's got it's worn away, and then underneath it, some kind of a hole is formed. As the waves come in, it pushes, and the water comes out of that, and there's this huge spout. That's going into high tide most of the time. But in fact, what we're looking at is that all the crevices are being filled. And that's kind of what we're going to be looking at as the rotational correction starts to fill all the crevices that need to rally as the other ones filter out. Geez, maybe that's too complex. In my mind, it's clear. Maybe it's not so clear in articulation, verbal articulation. Okay. Now, a quick question I had. Let's see. I think I saw it in the den. Let me just quickly scroll through here. Yeah, there was a question as to, no, it wasn't a question, it was more a statement, and I'm going to go to it as if it was a question, and it was on the 300-minute chart. There we go, 300-minute right there. On the NQ, this is the NASDAQ. Look at that. Hey, something's wrong. I've been notating, and I had it updated, and it didn't hold. All right, so that's something to figure out. So now what I'm looking at is I'm going to put in an up arrow because this is now gone. This is the 300-minute, that's the 5-hour, NASDAQ futures. And I've got this now in leg C. I don't really see any other way to count it at this particular point. So it's leg C at 38.26 up 31. In the chart itself, I wonder if this is going to be updated now. NQ14, yes. That looks to me like I have to call this a recycle. We did get that peak F with the MACD down and the stochastic under 80% just for a moment, and there was every reason to put the down arrow, and it was the sharpest pullback in a while. But now what I have to do is I have to do this. I have to type in that. I had it before, but I'm going to redo it. And that's the circle right there. That says instant restart after peak D. So this is, now I have to take away that plus, that down arrow. Remember, all you want when you're doing Chapman wave methodology is you want to make sure that you look at the last peak and decide, is this correct? Have I notated it correctly under this particular circumstances where we are right now? So I'm going to call this leg C in the daily, which says that we probably cannot make a top until at least Wednesday. If there's a gap down or a move down Wednesday, then it'll have to be Thursday that you can make D. So that's the soonest it could work out, Thursday or Friday, to make some kind of a peak D. Could this really be B? I'm not going to make it complicated. High-level consolidation, calling this a leg C. I'm not calling it G/C. I like it. I think that's the way it is. And I'm going to put down a little save. I'm saving it here. And that should be saved as the chart notation. So that's something I want you to do. Now, I wanted to also do 3 other things before we go to the next break. Just real quickly, I wanted to show you GE trying to balance here, got repelled at the 9-period moving average. IBM just can't get out of its own way. Triple M having a good day, but not a good day if there's a double top unfolding. And UTX, which is not acting well at all. So that's my 4. Those are my 4 Dow stocks, index stocks. And you know what? They're not acting well.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better, a 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability, available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, we are back. Basil Chapman, Tiger Technicians Hour, and we're going to go to Dan in Kingsborough, Mass. Hi Dan, how are you?
Very well, Basil. How are you?
I'm well, thank you. So
I'm calling about a stock that has popped pretty dramatically on news of hepatitis C buyout offers.
Oh, okay.
Achillion Pharmaceuticals.
Achillion Pharmaceuticals, Inc., trading at $7.73, down 4 cents. And do you have a position in it?
I do. I have a few.
I have a quick question for you. Were you in it before based on research that you had done, or is it a chart formation? What attracted you to this?
This was actually a day off from work and a day trade that turned into something that really piqued my interest, so I established a different position in it after the day trade was concluded.
Wow, excellent, very nice. Oh, boy, take more days off. So we're looking at a stock, folks, that just like 3 weeks ago, and we're looking at a stock trading nonchalantly in the 2s, not even touching 3, maybe just about 3. Let's see, just look at it. 2.95, and then out of the blue, it gaps up once, and it goes to 482, gaps up a second time the next day on the 10th of June, goes to 781, and then it works its way in the Chapman wave to an A, B, C, then it goes to a D on the 16th at 805, and 3 days ago it made an 861 high that I'm calling peak E for now. The MACD is very good, stochastics at 90%. Now, I'm intrigued because this stock very often has exactly that same big green bar, and then it gives all of it back up over the coming months, not just days, but months. That's looking at the monthly chart. It actually had a round number all-time high back in 2007 of 20, and the low that it's had was somewhere down in the 65-cent area. Can I make a recommendation? Don't act on it right this very second because it's holding very nicely. I'm suspecting that there is going to be a bit of a pullback, maybe fill the gap between 730 and somewhere around the 675 high. And if there's no news to follow through, then it could give back some until it spikes again for leg D. If it doesn't do it this week, sometime soon to go over 861. Here's my quick summation before we run out of time. I'm going to recommend that if you have a really good profit and you have enough, that you would take profit off on one part of your position. It's just a gift that you never expected. It's more than a gift. It's an extension of anything you could have dreamed of in this kind of time frame. Reward yourself. Take something off. That's number one. Number two is...
Can I interrupt for 1 second? Sorry, because I've already taken the profit off. I'm basically in a flat position right now.
So if...
I'm long in a flat position, but I've put a call spread on, and I also own shares.
Then there's not much I'm going to be able to say, and I'll tell you why. I love all the action about it. I would just get real upset if at any point in the next 2 weeks it closes under 570, somewhere in the 560s, because what I think might happen then, it's going to need another charge to the upside, some spark to get it going. But at this point, high-level consolidation, I think, is in store. And at the same time, I think it will make a leg D, but I don't know when, but it will go over 861. So that I think you've done exactly the right thing. It's not for me to dictate to you what to do. I think you planning it. I think you're you're in the sweet spot with this stock. Hopefully, there's going to be a little bit of follow-through of substance in the news, because that's what it's going to take to get it into the nines and hold there. I think you've got yourself a nice position. Congratulations.
Thank you very much. Music to my ears, because that's what I was hoping you would confirm for me.
Okay, very
that's
good,
exactly
Dan.
how I'm looking at it. Thank you so much.
Very good. Thank you for calling, and wonderful trade. So, folks, I think we're about to go out of time. Stay wonderful options hour coming up. This is real clear to me. If the volatility index in the next day starts to spike to 1190, 1230 area, watch out. If the Dow starts to take out 16,820, watch out for the downside. Otherwise, it's just business as usual. Be back tomorrow. Stay tuned.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.